My credit score was a 730 for years until it wasn't. Between consolidating my student loans and a health insurance slip up, I woke up one morning to my score being a 667. Now, that is definitely a danger zone for someone who is wanting to purchase a home. I'm 44 and I'm starting over, and I just don't have time to wait for my credit score to accidentally go up. So, in today's video, I'm going to be sharing with you my pivot plan to hopefully get my score to an 800 by 2028. So the first thing that I want to talk about is that slip up. For years, I had a score of above 730 and I prided myself on a 700 credit score. But what happened was when I consolidated my student loans with the Department of Ed, I noticed that my credit score dropped from a 730 to about a 715, maybe a little bit lower. Then all of a sudden, I noticed that it kept dropping every time I was late for my health insurance payments. Now, that was a real bummer because for years I was always on time, but that $500 payment I was really struggling with, especially since I was starting over from scratch. And so what I realized was that, you know what, if I plan to purchase a home and the entire reason that I'm starting over and rebuilding is to purchase my dream home, I need to make sure that my credit is just as important as that down payment. And so I started a credit score plan in order to raise up my score. And so here is my aggressive strategy. Now, I understand that a lot of individuals may not be in a position where they can really focus on credit when they find themselves in debt. However, I made sure that my debt repayment strategy was also aligned with my credit score strategy. So most people, what they do is when they have debt, they pay the minimum amount. Now, this is very important for you to be consistent because when you're on time and you're consistent, this is the baseline to keep your credit score above the water, right? You don't want it dropping, but you can keep it steady. However, the goal is to raise it. And so the way that you do that is you want to pay larger chunks when you can. And so every time I got extra revenue over the last 6 months, I made sure, in addition to my monthly minimum, I went and paid large chunks of money towards those debt. So my credit card debt, the IRS debt. And when I talk about large chunks, I'm talking anywhere from $2,000 to $3,000. And what that does is it crushes the utilization score. And I was able, I'm going to tag this video above where I talk about me paying off 4 debts. I was able to pay off 2 major debts that had a high interest rate in a short amount of time using this strategy. Now, if you don't have enough cash flow to pay off large chunks, that's okay. What you want to do is just make sure that you can at least do the baseline, which is the consistent on-time payment every single month. Another strategy is this. Let's say that you don't have a big chunk of money. You can do your minimum payment, but then you can also throw in an extra payment that month, and that can really help you lower your monthly payments as well. Now, here is my 2028 vision. So I do plan to purchase my home, hopefully by 2028. And so what I'm doing is I'm not just focusing on increasing my credit score for the sake of just increasing the number, but I'm increasing it for a purpose to purchase my home. And I really feel like, you know, I'm on the clock. Like I don't have a lot of time. My clock is a 3-year window. And hopefully by then I can raise it past the 730. Now, as of yesterday, my credit score is a 704. So I've been able to raise it from a 667 from September 2025. That's when it dropped, to now it's at a 704. But after paying off my first credit card debt, I believe in a couple weeks when, you know, it's calculated, it will raise. So I'm hoping it will get back to maybe a 720, 730, and then I can be on my way to that 800 score. And I'm really hoping that I can hit that 800 score well before 2028, but I'm at least giving myself a little bit of buffer room to do that. So one of the things that I want to tell you is that if you are starting over and you are over the age of 40, your credit is one of your biggest leverage. Do not allow that credit score to drop to a certain point where it's going to be so hard for you to climb up, especially if you are wanting to purchase a home or a car. So make sure that when you are on your debt repayment journey, or you're starting over and you're trying to build wealth, that credit score is just as important as everything else that you're building. All right, y'all. Well, that's all I have for you today. I just wanted to share that with you. And if you have any questions, feel free to drop them in the comments. I'll be more than happy to answer them. If you are new to my channel, welcome. My name is Aleru, and this was your Daily Dose with Dupay. Until next time, I wish you all a beautiful and blessed day.